morning from the ENCA and Money Desk. Now, will the medium-term budget policy statement be a make-or-break budget, or will the tough choices be left for February next year? Now, to answer this, we speak to Carmen Nel, economist from Terebinth Capital. Carmen, thank you so much for joining us this morning. Let's first look at the state of South Africa's finances. Are they as dire as we hear?
Well, certainly you would have heard in a lot of media and newspapers of late that, South Africa is at a fiscal cliff. In other words, our financial position as it relates to government is unsustainable. We would say it's certainly fragile, but we do have a little bit of time to make some decisions to try and turn a corner and stabilize the fiscal position. But those are very difficult decisions that have to be made. Currently, our debt to GDP ratio is sitting at around, let's say, 73%, which for a small open economy is quite high. And not only that, our borrowing costs are very expensive. So the sort of 10-year bond yield is around 12%, which is relatively high given how large our debt stock is. So in that sense, we need to start stabilizing it, given the risk that we could have even higher borrowing costs and potentially face rating downgrades. It's tough decisions either today or most likely waiting for the February budget, which is usually the make or break one.
Now, we're heading into an election year. What kind of impact could that have on the possible announcements made today and, like you said, which will be confirmed in February?
So certainly the fact that we have national elections next year will shape a lot of a lot of the decisions that will be made today or implied for, as you say, the decisions for February. Certainly the elections will make certain tax rate increases difficult. In particular, something like a VAT rate increase will be very tough to put through in an election year. Things possibly like a capital gains tax, I think the government might be more willing to do that, just because if you look at the electorate, those that would typically vote for the ANC would not necessarily be as impacted by capital gains tax. And obviously that would be seen as a more progressive move. Certainly some that have mooted an increase in your marginal personal income tax rate, I think that's quite difficult to achieve. And then obviously spending cuts will be very difficult to put through next year. So I think it will be highly unlikely that they'll cap the wage bill. And then the other big aspect is obviously the social relief of distress grant, which was again extended this year. That will most likely be extended again next year because of the elections. But at some point, a decision will have to be made around making it permanent. And then in what form will it continue, a basic income grant or a job seekers grant? And there's a lot of work that still needs to be done in government around that, I suspect.
What do you think are our biggest challenges at the moment? I'm just thinking, for example, our SOEs and bailouts.
Yes, well, certainly the news headlines already highlighted the dire Eskom position and the fact that many places don't have water. So our big constraint is growth. If we can solve our growth problem, then a lot of our fiscal headaches will start to go away. But as you mentioned, Eskom remains a thorn in the side of growth. Again, this year we've had a lot of load shedding, and that has had a very negative impact on growth and on corporate profitability and therefore on the government's tax revenues. We know Transnet is also now a binding constraint. If you just think about logistics, the ability to get stuff to ports and to export it to get revenues and therefore taxes. So I would say SOEs are both a hit on growth directly and then also indirectly because of the bailout. So the fact that government is taking money away from productive sectors or productive spending like infrastructure and giving it to these SOEs to pay back the money they borrowed effectively is a drain on growth. So yes, certainly the SOEs directly and indirectly.
So we always talk about investors and we wanting to attract investment to South Africa. And investors will be paying attention this afternoon. What do you think they need to hear in this statement this afternoon to consider or to continue their investments in the country?
Okay, so from an external investor perspective, certainly you would want commitment to ongoing fiscal consolidation. In other words, you don't want to see the government flip-flopping and now turning more populist just because it's an election year. So I think that is crucial. I think they would want to see ongoing commitment and implementation of reform. So that will be crucial. So again, something like the infrastructure fund, you would want explicit detail on it in today or in February, commitment and the signs that the government is able to crowd in the private sector. And I think also just from a local investor perspective, those of us who sit with our pension and savings money in equities and in the fixed income or bond market is from an equity perspective, certainly you don't want to see further tax rate hikes because that's also a squeeze on growth. And then from a bond market perspective, it's, it will be difficult to stomach even higher borrowing. So I think investors really want to see a commitment to fiscal consolidation via spending cuts and more effective spending rather than increased taxes or borrowing.
Thank you so much for your insights. That was Carmen Nel, economist from Terebinth Capital.